All right, so we caught a nice short, and some people were asking me to do a trade recap, so here it is. So these are the executions, and I'll do a trade recap of why I took the short, why I was looking for shorts, why I took profits there, and we'll do that right now. Okay, so first things first, on the daily chart, we took out the buy side here. So weekly power of 3, we opened up on Monday. We came up, took out the buy side. So that's two confluences, weekly power of 3. We took out buy side on the daily chart. And there's also an SMT here. That's 3 things telling us we're going to go lower. We have a clear drawn liquidity. So all of this low resistance liquidity. And then these equal lows on the daily chart, which is our drawn liquidity. And if you look at ES, this is where I closed my position when ES took the weekly fair value gap. So the weekly fair value gap on ES, this is what we're targeting. Once we took this, we closed the position on NASDAQ. So that was our drawn liquidity. Okay, so now that you know why we went short, why we were looking for shorts, how do you actually frame a short with a day like this? So we had news at 10:30. It was crude oil. It's very common for crude oil, 10:30, for the opening range to be pretty choppy, which is exactly what we saw. Originally, we were looking for a potential short here, but nothing really formed. And then I knew after seeing this move up, we were likely going to see a move down after 10:30. So what am I looking for? 1050 macro. You guys know I love my macros, so we just marked out the 1050 macro, and we're looking for a short potential silver bullet. So we're looking for the hourly candle to close bearish within the last 10 minutes. So framing a reversal on the last 10 minutes of the hourly candle, what would I want to see? So we took out the buy side here. We do not need to come up here. This is enough. We took out the buy side and we broke lower. Now originally I tried to get a short here. We did not get a fill. Obviously we didn't. I put a limit order here, did not get a fill. And then we tried to get the breaker block right here. And I also missed that fill. There was a fair value gap here. That was a mistake on my end. In fact, my model says to just take the fair value gap and ignore the breaker block. Just put the stop loss at the breaker, but there was a fair value gap here and we did not take it. I should have put my limit order here. That's okay because our drawn liquidity is still all the way down here and here, so we can re-enter this move if it gives us a re-entry opportunity, in which case it did. This is our re-entry opportunity. So 11 a.m. power of 3 concept. We opened up at 11 a.m. Open, high, looking for this to fail because I know this is a manipulation, and we came back into the range. Where did I short? I shorted pretty much right here. I showed the executions. I'll show it once more. We shorted, sorry, let me show the executions. Right there. So as soon as this candle closed, I was looking for entry on the fair value gap right here, and we just took it market sell right when it tapped in. I filled myself there in case it was a breakaway gap. You can see, so we had literally 1 point of drawdown. And in terms of taking profits, you could have just taken out on this low. What I ended up doing was looking at ES, and once ES took the weekly fair value gap right there, that's when we closed. So we closed it around right here. So you can see we ended up getting just a little bit more than the sell side. We ended up getting a little bit like down here, which is nice. So that was pretty much the entire trade. In the lens of a market maker model, which is someone asked me from my live stream to explain it, this is your original consolidation, right? You have your distribution, redistribution, smart money reversal right here. That's your low risk buy, sorry, low risk sell. And so smart money reversal. And then I was entering this trade as a stage 1 distribution. So I was looking for an accumulation after the reversal. Usually this will form in some sort of PD rate from the left side. So in this case, it was this inversion fair value gap right here. You can see once we inverse, came back, stayed in the lower half. You could have taken that as well. I was able to get a nicer fill here. If I missed that fill, then I would have looked for this, because now this is a balanced price range. You don't want to see it trade up into the upper half after it leaves, which it did not. And you could have shorted that as well. And then we trailed our stop to this order block. So right here, which is also the inversion high pretty much. So you could have taken that as well, but we got a little bit better fill. And this was your first stage accumulation. And then we got reaccumulation, another leg lower. And then eventually we kept going lower. We kept going lower towards the external draw because on the higher time frame, we are also in a model within itself. And we have relative equal lows here. Like I said, that blue line is kind of where I think price was going to go. So that's pretty much everything I took there. This is your stage 1 distribution. That's why you can trust the inversion here. And yeah, that's pretty much everything for this trade. Hopefully you guys understand the trade recap. I'll be live every day, 9:15 a.m. EST, doing my trading system live. So if you want to watch me do my trading system live, tune in. Peace.